Ladies and gentlemen, welcome to Q4 FY'24 earnings conference call of Maharashtra Seamless Limited, hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions at the end of the presentation. Should you need an assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Vikas Singh from PhillipCapital India. Thank you, and over to you, sir.
Thank you, Manav. A warm welcome to everybody on Maharashtra Seamless Q4 FY'24 Concall. From the management side, we have with us today Mr. Kaushal Bengali, Deputy General Manager, Investor Relationship and Finance. Without taking any much time, I'll give the call to Kaushal for his opening remarks. Over to you, Kaushal.
Thank you, Vikas. Good afternoon, and thank you, shareholders, for joining our earnings call. In FY'24, we have achieved highest ever EBITDA, highest profit after tax, highest EPS, and highest margins. This performance only reiterates the strength of our core operations, as we've been able to achieve all of this despite lower production and sales. In FY'24, our order execution was strong, and we continue to improve upon our marketing initiatives so as to secure high-value orders. I will briefly summarize key financial indicators. In FY'24, our revenue declined by 4%. However, EBITDA increased by 18% to rupees 1,223 crores. PAT increased by 23% to rupees 975 crores, and EPS increased by 23% to rupees 73 per share. Our performance in terms of tonnage, revenue, and profitability was lower in Q4 FY'24 versus Q3 FY'24 on account of a large size order which was expected in Q4 but was delayed and received in second week of Q1 FY'25. This led to lower tonnage being manufactured in Q4, which consequently led to lower revenue and profit. This timing mismatch should not have any longer term impact, as what could not be manufactured in the last financial year would now be made up in the current financial year, FY'25. We have also actively taken steps in the previous quarter to ensure that our margin was not impacted despite lower production. We've been able to control costs despite volatile macroeconomic environment and inflationary pressures. Apart from financials, there are 5 key points which we would like to draw attention to. The first is the treasury. Our treasury is at rupees 1,859 crores as on 31st March 24. The treasury level has almost doubled over the last financial year, even after large utilizations towards prepayment of debt and dividend were made. We are conserving this liquidity and will utilize the same judiciously. Second, we've been included in various NSE indexes from 28th March 2024, namely Nifty 500, Nifty Small Cap 250, and Nifty Mid Small Cap 400. Our FII and DII holding together has also gone up to 16% from 7% at the start of the year. The third point is regarding ICDs and corporate guarantees. In line with the commitment made to shareholders 2 years ago, there are no ICDs to unrelated parties or corporate guarantees outstanding as on 31st March 24. We have come a long way from the time when this used to be the main cause of concern, and that has now been fully and completely resolved. The fourth point is regarding dividend. The dividend amount paid for FY22 was doubled for FY23. Thereafter, the dividend paid for FY24 was doubled again as dividend of rupees 10 per share has been announced, subject to approval of shareholders, against rupees 5 per share for the previous financial year. The final point is regarding market demand. I wish to reiterate that capital goods and infrastructure in general and oil and gas specifically continue to witness strong demand for the medium term. This directly impacts the seamless pipes market. Our seamless pipes market remains strong, driven by capital expenditure and spending in oil and gas sector, as we are seeing our order book being replenished and maintained at good level. Currently, our order book is at 1,753 crores, of which 60% is on account of ONGC and Oil India. I would now like to take you through the presentation very quickly. The first few slides of the presentation talk about the company. The revenue for Q4 FY24 was 1,259 crores. EBITDA was 276 crores with a margin of 23%. PAT was 223 crores with a margin of 18%. EPS was at 17 rupees per share. On an annual level, we can see how the company has improved upon its performance from FY21 to FY24, and we keep going from strength to strength, subject to conditions of the market. The operational and financial indicators, segment-wise, primarily seamless and ERW, are given on slide 8. The EBITDA per ton for the seamless segment was 21,619 rupees, and for the ERW segment was rupees 11,803. We closed the year with an average EBITDA per ton for the seamless segment of 25,793 rupees and 7,315 rupees for the ERW segment. EBITDA mix for Q4 was 76% on account of the seamless segment, and for FY24, 84% generated by the seamless segment. Generally speaking, this trend will continue going forward. Slide 10 talks about the unquoted equity and preference share investments and ICDs. You will note that there are no ICDs as on 31st March 24, two unrelated entities. I've already spoken about the liquid investments, which are detailed on the next couple of slides. If individuals want an additional breakup, we can provide that to them separately. There are no corporate guarantee outstanding as on 31st March 24. The timeline committed to shareholders 2 years ago for complete discharge of all corporate guarantees was September 24. However, we have achieved this milestone 6 months ahead of schedule. Slide 14 talks about the capital expenditure plans that we have. We have commenced our capital expenditure by purchasing land at our Telangana unit and placing orders for relevant machinery. The same is in process, and we expect to complete that within this financial year. We do not require any debt to fund any capital expenditure or working capital requirements, as we have a treasury of 1,859 crores. Details of order book are given on the next slide. Our order book is supported by back-to-back booking of raw materials leading to locking of margins and minimizing impact of fluctuating raw material prices. We have also been able to dispatch some quantity of drill pipes in the fourth quarter of last year, and we continue to manufacture and dispatch drill pipes in current quarter as well. The next 3 slides talk about the government policies in place and the sales and marketing update along with market trends, which I would request interested shareholders to kindly familiarize themselves with, as that will give you an idea of where the demand is originating and how we are placed for the same. Slide 19 talks about the shareholding structure as on 31st March 24. There was some creeping acquisition in the fourth quarter of FY'24 with promoter holding increasing to 68%. Number of FIIs and mutual fund schemes have also increased. That concludes the presentation, and I would now request Vikas to open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have our first question from the line of Tushar Ragatate from Kamaika Wealth Management. Please go ahead.
Yeah. Good afternoon, sir. Thank you for the opportunity. I just wanted to mention before that, there are some higher value orders. So basically, what's the EBITDA per ton for those?
We cannot disclose that figure. However, margins for high value orders by definition would be more than the mean margin.
Fair. And sir, what is that exactly? Like in Q3, you had 30,471 of EBITDA per ton. Now it came down to 21,619. So just wanted to know that.
I'm not sure how to respond to that. What is your question?
Basically, I just wanted to understand your target EBITDA per ton margin, EBITDA per ton for FY'25 and 26. Like how are you seeing that?
It is difficult for us to give you a figure of EBITDA margin per ton because we operate on short cycle order books. Currently, our order book is at 1,750 odd crores, which is slightly less than 4 months. So on a 4-month order book, I cannot give you margins which will fructify over next year or next couple of years. But what I can tell you is that margins are generally expected to remain above 15,000 rupees per ton.
Fair enough, sir. That was helpful. And sir, considering your capex, 41% of your total capex of the value is going in hot mill upgrade. And sir, when can we expect that to commercialize? Also, the Telangana facility finishing capex.
Hello.
Hello.
Yes.
Should I repeat the question?
Yes, because I thought you were cut off.
Oh, fair enough. So I just wanted to know the hot mill upgrade. So it's nearly 41% of our total capex outlay. So when can we expect that to commercialize? And also the Telangana facility commercialization month?
The Telangana finishing line would be the first item of capital expenditure which we would complete, and once that is done, then we would consider the hot mill upgrade.
Is the timeline for the same?
Timeline for the Telangana it has already commenced, and it is expected to be completed within this financial year.
Okay. And the 800 crore of revenue potential of seen out of that, post fully utilized, right?
Yes.
Okay, fair enough. I'll get back in the queue, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Aryan Sharma from B&K Securities. Please go ahead.
Hello, sir. I have a couple of questions. So, in the PPT, since you have mentioned 852 crores of capex for FY'24 to FY'26, just wanted to get an understanding or a breakup of this capex. So, how much have we spent in FY'24, and how much are we expecting to spend in FY'25 and '26?
Not much has been spent in FY'24 because the initial portion required acquisition of land, which we have done, which was time consuming, but did not require a significant amount. The second stage for the Telangana finishing line facility was identification of machinery, which took a longer period than we had anticipated. We placed orders for those machinery, but payment is not yet been due. So in FY'24, a significant amount has not yet been spent. I think for the Telangana facility, all of the expenditure will happen in FY'25, as we expect to complete it within this financial year.
Okay, sir. And could you just quantify the total capex you are planning to spend in FY'25 and remaining in FY'26? If outside Telangana, if you are planning on spending like something else?
The Telangana facility is for 184 crores, so you can, and some portion of that has already been spent in FY'24. So I think if you are modeling, then you can consider 200 crores capex for now. However, if that changes, we will update you.
Okay, sir. Thank you. So, what is the export mix in the 700 crore order which we have received? And couple of questions about exports as well. Why exports have come down, and when are we expecting it to recover?
In the total dispatches in FY'24, exports were around 5 to 6%, and exports have not yet revived. Whenever that revival happens, we'll immediately see an impact of that. However, in the last financial year, even though exports were at 5 to 6% of total dispatches, it did not impact upon our margins, as domestic demand is very good, as is evident from our existing order book.
Okay. So also, since we have huge treasury amount, like you have mentioned in the beginning of the Concall, and so we technically have a lot of liquid cash in hand. So what is the future capital allocation policy which we are maintaining, and are any inorganic opportunities being evaluated right now?
We are utilizing the liquid investments judiciously. We've improved upon our dividend. We have doubled the dividend that we are going to pay for FY'24, subject to approval of shareholders. Apart from that, we are always on the lookout for inorganic opportunities in core business. However, none of that is available in India. Should a suitable opportunity come up overseas, we immediately capitalize upon that. Apart from these 2 points, the cash could be utilized towards capital expenditure.
Okay. So one more question about the margin. So what we have seen that in FY'24, the overall margins, we have earned around 24 rupees per kg in EBITDA. EBITDA per kg is around rupees 24. But we have guided that the future EBITDA per kg will be lower than this at around 18 to 20. So why are we expecting a lower EBITDA margin?
The EBITDA margin that we earned in quarter 3 of FY'24 was an exception of 30,000 rupees per ton, which has happened maybe only once or twice in the past before Q3 FY'24, which led to an upward rise in the margin levels that we have earned in total in FY'24. In Q4, our EBITDA margin was at 21,000 rupees per ton. What we are guiding is that margins will remain above 15,000 rupees. We are not saying that there will be a decline, but what we are saying is it is early for us to comment on long-term margins because we always work on short cycle order books.
Okay. So one final question. Actually, in PPT, you have mentioned that the domestic market size for drill pipes is around 10,000 MT, and for subsea tower service seamless pipes to be at 35,000 MT. So how much of this market size are we targeting to capture? And currently, in this scenario, how much is being supplied to import? What is the import market share in these two products?
We will target as much as is reasonably possible, but we already have a majority market share in both these segments.
And so, how much is imports currently, if people mention?
There are no imports. These are import substitution products.
Okay. Got it, sir. Thank you, sir. I'll get back in the queue.
Thank you. We have our next question from the line of Dhananjay Bagrodia from Ask Investments. Please go ahead.
Hi, sir. Just a couple of questions. How is the end demand market playing out right now? I know elections was done with, but overall, how are we seeing how are we seeing in terms of inquiry going ahead?
There is no significant impact of elections for us because the general elections were announced and thereafter we received a large order from ONGC of 674 crores.
Okay.
So we've not seen any impact of the elections on our business.
Okay. And so how are we seeing it now in terms of going ahead? Maybe you could give by end product and demand market by segment. How is that coming along?
What do you mean?
Like how is the end demand right now in terms of which segment are you seeing good growth in and how is that coming? Any particular customers or anything along those lines?
We have an order book of 1,750 crores. We are quite comfortable with that level of order book.
Okay, that's executable in less than a year.
I'm sorry?
That's executable over less than a year.
3 to 4 months. That is the level of order book that we like to maintain, and we have that right now.
Sure. And maybe I missed this, but why has depreciation been going down in terms of our expenses? Is it on WDV or how is that?
Certain assets have been fully depreciated and the amount of depreciation charge that is required has been fully expensed out.
Okay, fine.
Therefore, depreciation has reduced.
Okay, sure. Thank you so much. I'll get back in the phone.
Thank you. The next question is from the line of Ria from Equitas. Please go ahead.
Thank you for giving the opportunity. My first question is in regards to the maintenance shutdown which we'll take next year. So how long that would be and when will we take it?
most likely we'll be taking a maintenance shutdown towards last week of May or first week of June. And it will be for a...
Oh, sorry, sir.
Hello?
We got the participant disconnected. Yeah, sorry, sir. Sorry about that. We have our next question from the line of Nikhil Agarwal from VT Capital. Please go ahead.
Good evening, sir, and thank you for the opportunity. Sir, just wanted to understand, billet prices are at a 1-year high. So how will it impact your margins in maybe Q1, Q2?
No, billet prices are not at a 1-year high.
They've increased significantly over the last 2 months.
Maybe that's a different kind of billet, because the kind of billet that we use are round steel billets, and the billets that you may be referring to are square billets, which we do not use.
Okay, so what has been the price trend in those type of billets?
There has been no significant move upwards in the price of round steel billets.
Okay.
And our order book is supported by back-to-back booking of raw material, so that our margins are locked and we are not impacted by fluctuating raw material prices.
Okay. No, sir, because last year our margins had gone up, I suppose, because billet prices had fallen down during the 45-day period between order booking and the execution. So that's where the question came from.
No. Not between order booking and execution.
Between placing the order and the order booking, I guess. The 45
no,
days.
actually, the time period between submission of a tender and awarding of a tender.
Yes, I meant that. Yes, sorry.
In that period, that happens. So that is a very small component of everything. But whenever that happens, the impact will be seen.
Okay, so that's not a concern for us right now, since the prices you're saying it's okay, got it. And so US rig counts, they have gone down, but I can see that international rig counts have gone up as a whole. So, like, are we looking to supply to countries other than US? I mean, Canada has gone up, but are we looking to supply to countries other than US?
We will only do that if we are able to get good margins in those orders, because US and Canada are our target export markets. We want to explore other markets, but not at the cost of margin. Our objective is not maintaining presence in various markets. Our objective is to maximize profit per ton.
All right, got it. And so you said the maintenance shutdown will be during the last week of May or first week of June. For how long would that be?
1 month.
1 month. Okay, got it, sir. Thank you so much. That's it.
Thank you.
Thank you. We have the previous participant connected with us again. The next question is from the line of Ria from Equitas. Please go ahead.
Thank you so much. Also, the large order which we were talking about, what would be the volumes for these large orders which are shifted to the next year?
The large order was the order from ONGC which we received in the second week of April of 674 crores.
Okay. I assume that was for the 11-month, right, that order?
The delivery is over a period of 44 weeks, so staggered, yes.
Yes. Okay. And did it produce for this particular order, or the production was also left and it will be shifted to the next from April onwards?
We only manufacture once we get an order, because only after we get an order is the order for raw material placed, and thereafter manufacturing starts.
Oh, got it. Also, in terms of capex, we are saying that when will the capex be online, and how long do we think that time it will take it for it to ramp up, the finishing line?
The Telangana finishing line has started, and the capex for the Telangana finishing line has started, and we expect to complete that within this financial year. Once the installation of the line is completed, we can immediately ramp up production. So we expect volume growth to take place in FY'26.
Okay. So next year there will be no addition from the capex then?
Not on the Telangana finishing line front, because that would have been completed.
Right. Thank you so much. That's it from my side.
Thank you.
Thank you. The next question is from the line of Simarjeet from Almond Financial Services. Please go ahead.
Yeah, thank you. Sir, I just want to understand one thing, that, what can be the peak revenue one can expect from the Telangana unit once it will be, fully commissioned in, FY'26 or, by FY'27? And will this, Telangana unit be, margin accretive, or it will have that, sort of similar margins which we are having from other things?
Right now we are generating between 800 to 900 crores of revenue from the Telangana unit, but it is operating at 50% of its capacity, because the remaining 50% is not being used as there is a bottleneck on the finishing front.
Okay.
Once the finishing line has been installed, then we can expect revenue to go up to 1,600 rupees on an 1,600 crore rupees on an annual basis from the Telangana unit.
Okay.
Subject to selling price being maintained and sufficient market demand being in place, and all of those other factors.
Okay. Sir, are we having any plans for the, pipes for the hydrogen market, something like that in our mindset, or no?
We are discussing that, but it is too early to make any definitive comment on that, but that has been discussed. That's all that I can say right now.
Okay. Done. Thank you, sir. Thank you. All the best. Yeah.
Thank you.
Thank you. We have our next question from the line of Prolin Nandu from Edelweiss Alternative Asset Advisors. Please go ahead.
Yeah. Hi, management. So I have a couple of questions, right? One is, again, as you mentioned that, 15,000 rupees could be the floor in terms of EBITDA per ton when it comes to seamless pipe. And there was a one-off or one type of order in Q3. Now, if we talk about the mix, right? I mean, you have few types of pipe. There is subsea pipe, there is drilling pipe, there is CNG pipe. So what is the range of EBITDA per ton for these different types of pipes that we have? And, how much of a mix change going forward in FY'25, FY'26 can lead to the upward movement in EBITDA per ton? And will this, again, EBITDA per ton change significantly once most of our capex has been done?
I cannot give you product-wise EBITDA per ton. Once all capex is done, there will be higher profit and higher value addition products being manufactured. That is the whole purpose of doing capex.
But if you can at least rank which would be the highest EBITDA per ton category within this 3-4 categories that we supply. I don't want the absolute number. The ranking will also help me to understand how our EBITDA per ton will move going forward.
I cannot do that. We have disclosed more than what our competitors do. I think you should refer to our presentation.
Sure. Thank you. That's it from my side.
Thank you. We have our next question from the line of Pradeep Rawat from Yogi Capital. Please go ahead.
Hi, good evening, sir, and thank you for the opportunity. So, sir, do you see any new capex being announced in the seamless tube market?
I am given to believe that one of our competitors has announced capex. How much that would be and what impact it will have on a tonnage front, I don't have that information.
Okay. And with respect to the ISMT turnaround as well as increasing our own utilization at United Seamless, so do you see these ramp-ups to create a situation of oversupply in the industry?
No.
Okay, so my next question is regarding the dumping. So, sir, with respect to dumping, do you see any kind of dumping in any of the product line related to seamless pipes?
In a few segments which are not covered by the anti-dumping duty in place.
Okay, and if ever these anti-dumping duties are lifted, so the Indian producers are competitive enough to compete against the foreign producers?
Yes, we are one of the lowest cost manufacturers, but unfortunately, Chinese dumping exists and we have to fight that.
Yeah, so we were lowest cost producer earlier also, or we just became right now?
No, earlier as well, because of inherent advantages that are present with Indian manufacturers in terms of access to cheap labor and access to plant and equipment which are not purchased at full price. All of those benefits of depreciation and interest and human capital do add up.
Yeah, understandable. And my last question was regarding the cash that we have. So we have a planned capex of around 800 crore and we have in treasury around 1900 crore rupees. So what are we planning to do with the rest of the amount?
We are conserving cash and we will use it judiciously. As I mentioned earlier, if there are any inorganic opportunities available, which there are not right now, if they do come up, then we will capitalize immediately.
So, sir, if we don't spot any inorganic opportunities, so where are we planning to spend those cash in organic front? Like, can you give a broad sense of idea?
So we've already announced capital expenditure. We have doubled the dividend that we were paying last year, and then yesterday board has announced that it will double the dividend which it paid last year. So essentially over the past 2 years we have quadrupled the dividend amount which would be paid out subject to approval of shareholders. And we want to invest in core business only. Where that will be and when that will be and how much that will be would be communicated in due course when all of that materializes. But as of now, we've told you all that we know.
Yeah, great. Thank you and all the best, sir.
Thank you.
Thank you. We have our next question from the line of Chetan Doshi from Tulsi Capital. Please go ahead.
Yeah, good evening, sir. I have a couple of questions. One is, in the presentation, you have mentioned that we have successfully dispatched an entire order of subsea SAR service seamless pipes. Can you just tell me what quantity in value, in terms of value, how much we have dispatched and when it was dispatched? So, customer is satisfied with the performance of this particular product, and I suppose it is an import substitute. So what future you foresee particularly in this segment in coming days?
I cannot tell you the quantity and I cannot tell you the amount. I can tell you that the customer is satisfied and we are getting regular orders.
Acha, repeat orders has already been placed for this particular product?
Yes.
Acha. So in current financial year, what is your target for this particular segment?
Getting as much orders as possible, but we already have majority in this segment.
Acha. You have no competition as far as this product goes in, as far as India is concerned?
No, we have competition, but we already have majority.
Major stake is with you.
Yes.
Okay.
This is an import substitution product, sir.
Yeah, that is true. Are you planning to, the capacity is sufficient, or you are planning to invest something on particular this product line?
Sir, we don't have to necessarily invest in the product line, but the capital expenditure plans that we have announced, they will cover all sorts of value addition products.
So, a specific plant is not required to manufacture this particular product?
No. Because even in our current facilities, we are manufacturing this.
Okay. Yeah. Thank you very much.
Thank you.
Thank you. The next question is from the line of Rakesh Roy from Boring AMC. Please go ahead.
Hi, sir. My first question is, can you share the realization part for seamless and ERW for this quarter and last quarter and same to last year?
We do not share realization figures.
Okay. And any broadly idea how much is there nearby?
No.
Okay. And sir, just to check, you have the 1800 plus cash and you have 800 capex plus dividend increase. And you say you are looking for inorganic growth acquisition. In which geography you are looking for acquisition or any company that in which geography you are most focused?
Earlier we were looking within India. We were looking to acquire one of our competitors, but that did not happen. We were looking at United Seamless, and that happened successfully. We can look at any geography as long as the equipment is as per our requirement and the cost of the equipment is also as per our requirement. Geography is not so important for us because we have the ability to dismantle equipment overseas, pack them into boxes, ship them to India, and assemble them and commission them within India.
Right, sir. Okay. Thank you, sir. Thank you for much, sir.
Thank you.
Thank you. We have our next question from the line of Afzal. It's from the line of Richa from Equimaster. Please go ahead. Sorry to interrupt, Ms. Richa. We are unable to hear you. Can you please use your handset? No. You are sounding very low.
Actually, I think this is right now. I'm working from home. So, I mean, if I'm audible, I would.
Ms. Richa, I would request you to rejoin the queue as we are unable to hear you. We have our next question from the line of Asha Patel from Molecule Venture. Please go ahead.
Thank you for the opportunity. Congratulations to the entire team for successfully turning around the balance sheet on all the corporate governance targets which we have given in the past. So my first question is that our seamless EBITDA per ton is down from close to 30,000 range to 22,000 range. I understand you can't give the specifics, but can you please guide us whether this was due to RM raw material cost push, which we had to take an expense in this quarter, or was it really due to realization softening?
In Q3, there was a slight timing mismatch between the time the tender was submitted and the time at which the order was awarded. During that time, prices of raw material fell, which meant that we were able to generate higher margins. The margins that we generated in Q3 FY'24, they were on a higher side, and in Q4 they have corrected and come down to 21,000 rupees per ton. Going forward, we expect margins to stay upwards of 15,000 rupees per ton. The reason why I cannot give you specific guidance is because we have short cycle order book of 3 to 4 months, and we expect margins for the entire year to stay above 15,000 rupees per ton.
Fair enough. And so, second question would be that, given that coking coal has corrected meaningfully in the last 6 months, it is down from close to above 325 levels to 235 levels. So, do we expect some, given the lower price procurement, do you expect margin improvement couple of quarters down the line?
As most of our orders are backed by raw material purchases, we don't expect significant impact of changes in raw material prices. But if there is a timing difference like that happened in Q3, we will be beneficiaries of that.
Got it, sir. So last question, what is why are ERW segment EBITDA per ton increased meaningfully by 85% quarter on quarter?
The ERW segment is actually a blend of two sub-segments. ERW pipes are supplied to the oil sector and to the water sector. Oil sector orders are more margin accretive than water sector orders. In any given quarter, the margin that is reported for the ERW segment is a blend of these two segments. Whichever type of segment is serviced more in that quarter will determine how the margin pays out. Generally speaking, ERW margins are expected to be between 6,000 to 11,000 rupees per ton, depending on the kind of product that has been dispatched in the given quarter.
Got it, sir. Okay. Thank you. All the best.
Thank you.
Thank you. We have our next question from the line of Saket Kapoor from Kapoor Co. Please go ahead.
Yeah. Namaskar, Kaushal-ji, and thank you for the opportunity. So do we have Mr. Jindal also on the call? I joined very late. I missed your opening remark.
No.
Okay. So, sir, you were talking about this preventive shutdown in our mill for happening for 1 month. So, how will this affect our volume for the year? I think so during an earlier conversation, you were mentioning about that impact being negated. If you could just complete that part of the answer, sir.
So, in Q1 FY'25, we will be taking preventive maintenance shutdown in one of our mills. It will most likely be either in last week of May or first week of June. It will be for a period of 1 month. That is one aspect, which will lead to lower production in the first quarter of FY'25. We are also parallelly working on capital expenditure for our Telangana facility and installation of the finishing line. If the installation of the finishing line is completed before the end of this financial year, the current financial year, then we can see higher production in the Telangana unit. If that happens, then the loss in production in the first quarter will be negated by the increase in production at the Telangana unit towards the end of FY'25. That is the option which I was proposing. If that does not happen, then there will be loss of production in FY'25 compared to the production in FY'24.
And what should be the the percentage that we should look in loss of tonnage on a ballpark number? If we do around 1 lakh tons in a 3-month basis, so 35 to 40,000 should be a good number we should work out?
You're talking about the loss of production. So I think the loss of production in the June quarter, the current quarter, would be around 15,000 tons.
15,000. Okay. Sir, as you mentioned about the demand outlook, you mentioned that there is the impact on elections. These are not the factors that will drive the prices and the demand. That is the understanding. That since we are, why I'm putting this question is that we are today 45 days into this quarter. We are in 22nd May, and as you have given us the order book as on 15th May, that stands closer to 1,750 crores, 1,770 crores. So if you could give us some more color, how have the dispatches or the ballpark number been when we compare March quarter exit run rate to our 45 days into this quarter?
I don't think that would be appropriate because we've never done that in the past. We've never given guidance of dispatches completed within 45 days. We do not share monthly operational updates. But the only thing that I can tell you for this quarter, which is the most material and most relevant since we are halfway into the quarter, is that there will be a preventive maintenance shutdown, which will lead to loss of production of at least 15,000.
Right. So now point about this ONGC order part, which our earlier participant Riya ma'am also spoke. In the press release part, it was mentioned that the deliverables will be dispatched over a period of 44 weeks. That works out to around 11 months. Wherein you alluded to the point that our order book की total executable period is 4 महीने है. So if you could explain, sir, what are you trying to?
So it's a good point that you have raised. So order book as such is for a period of 4 months. If you consider that everything is manufactured within a period of 3 to 4 months by prorating the sales that you do over the year over a period of over the value of the order. In this particular case, the order from ONGC was split into 2 segments. So the initial segment is what we would have received in the 4th quarter of last financial year, which would have led to higher production, and the balance portion would then be manufactured in FY'25. However, that did not actually happen. The entire order was received in FY'25.
No, sir. I still did not get. If we take 674 as the size and the execution period of 44 weeks, will this order get executed within the coming 4 months, or will it percolate to the entire financial year? Because 11 months from April means this order
will get executed in 44 weeks. A certain portion of the order was supposed to be executed in a shorter time period and not 44 weeks, because 44 weeks is the entire time limit that ONGC gives us for execution of this order. When we have to execute is something which is decided by ONGC. So we were expecting this order to come in earlier in the previous financial year. That did not happen.
Sir, you mentioned about...
Sorry to interrupt, sir. Saket, sir. We would request you to rejoin the queue as there are several participants waiting. Thank you. We have our next question from the line of Radha from B&K Securities. Please go ahead.
Hi, sir. Thank you for the opportunity. Am I audible?
Yes.
Sir, I wanted to understand, you mentioned that US and Canada are key markets for exports. So what is the market size for seamless pipes in US and Canada? And also if you could tell about what is the global market size and how much is China out of it?
Market size in US and Canada is very big. Almost all seamless pipe manufacturing countries want to export to US and Canada because of the amount of drilling activities that take place. People also want to export to the Middle East, but we do not export to the Middle East because of presence of China. Very generally speaking, the size of the entire seamless pipes market would be around 10 million tons, although it is difficult to verify this figure because there are capacities in China which are not documented, and in other geographies which are not documented in a concise manner by any one entity. I hope that answers your question.
Yes, so that was very helpful. Just a ballpark number gives us a sense. And China would be 40 to 50% of this 10 million tons?
I don't have data on the basis of which I can make that statement, but China does have large capacities.
And sir, I believe Russia is one of the key players, and there's one large group, Russian group, making seamless pipes. So other than that, when we are exporting to US and Canada, who would be our key competitors? And also just a bit of, any kind of indication of what could be the market size of US and Canada?
I don't have the market size. I think you have access to more databases than I do, so maybe you will have that information if you look for it. In terms of competitors, international competitors are ArcelorMittal, JFE, Tenaris, Temas, TMK. Jindal SAW is also a competitor in the international market. Valorex is a competitor. I've given you 6 names.
Yes, thanks. And so Europe has an anti-dumping duty from China, but not for India. So are we also exporting to Europe?
Very small quantity.
So any plans to increase or any opportunity that we can see in the near term?
Our key markets remain US and Canada because we do not want to export at the cost of margins. Our objective is to increase margin per ton, maximize it, and not try to maintain presence wherever we can.
So why do you see better margins in the US market versus Europe market currently? And
because
when do you
customers
expect
are willing to pay higher prices.
Sorry?
Because customers are willing to pay higher prices.
In US. And when do we see the export market to revive, sir?
We hope it does as early as possible, but that has not happened in the last financial year.
Okay, so thanks and all the best.
Thank you.
Thank you. Ladies and gentlemen, that would be the last question for today due to time constraint, and I would now like to hand the conference over to Mr. Vikas Singh for closing comments. Over to you, sir.
Thank you. On behalf of Phillip Capital, I would like to thank Maharashtra Seamless and Kaushal for giving us the opportunity to host the call. Kaushal, now is call to you for any closing remarks.
Thank you, shareholders, for joining us on this call. I can sense from the kind of conversation that took place that some disappointment is evident. But please bear in mind that we are a company that has been a market leader for the past 35 years, and one quarterly result which is lower compared to the previous quarter should not discourage shareholders, because if you look at our performance on an annual basis, we have improved significantly. We have addressed numerous corporate governance issues over the past 2 to 3 years. We have remained true to our commitment of addressing at least a couple of issues within the given time period. In fact, these were the only 2 issues on which we gave specific time periods, and we have been able to do that, namely the ICDs and the corporate guarantees. On the dividend front, we have quadrupled the amount of dividend paid over the past 2 years. Finally, our cash balance is at an all-time high. Our margins are exceptionally good. We would only urge you to stay connected with us and keep tracking us because we are market leaders at the end of the day, and we will continue to be market leaders. I thank you again for your valuable input, and I would also like to thank Vikas for covering Maharashtra Seamless for so many years and organizing these calls. Thank you, Vikas, and thank you, shareholders.
Thank you, Kaushal.
On behalf of Phillip Capital India Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.